The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now. What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for Sunrun with the ticker symbol RUN. This was a viewer's request, and thank you for your donation. I will first go over what I see on the daily chart and finish the video off with the weekly chart. Here we have the daily chart for Sunrun, ticker symbol RUN, run. So let's go over the price action. And right now, overall the macro structure is range bound on the daily chart since about January of last year. So I can go and draw a range on the current price action. So you can see the lows are right around this $19 level, and the resistance is right around this 34.35 level. Yeah, more closer to the 34.50 level is the resistance for this range. Maybe a little bit lower. Probably the 34 level is the correct spot. Anyway, we have this yellow range the price action is inside of. I'll go over the past history because I can tell us a little bit more of what's going on. So prices broke outside of the range on the top side, failed because prices came back inside the range. It tried one more time, and then this time it failed again. So if the market does something twice and it fails, it's most likely to do the opposite. So you can see how it broke out once, failed. It broke out twice, failed because prices came back inside the range and back below the EMA. So that was a sign to sell. And you can see the traders entered right near this candle or even below it. And they were like, okay, I'm gonna write it to the opposite side of the range because range rules say that if prices are at the top of the range, we go to the bottom. And if prices are on the bottom of the range, we go to the top. So either way, prices sold off strongly, created a very large impulse. So this was one entire leg down. Prices bounced at the lower side of the range, not a coincidence. Prices went up again. It started stalling out right near the highs at this 32.60 level. After this uptrend kind of played out, prices just shot right down, and now you can drag the measure move over because prices could be in the formation of another impulse, because if the market does a move, strong move, it can do another one the same size. So that's why these measure moves work out so nicely. So basically the market is attempting to reach this $12.77 level. It tried once right over here, so this was the first attempt, and then prices went up, and this is the second attempt. So right now the second attempt is already made, so this could be signaling that this measure move will not be reached, and we could see a reversal back to the highs of the range because prices are currently at the lows. However, there's a couple of reasons why that might not happen. Is because prices broke outside of this 22.30 level. This was a ranging pattern inside of this macro range because the market is a fractal. So right now we're still below it, and it's getting a couple attempts to come back inside, but it looks like that's failing for the bulls too. So we had one attempt to come back inside. This could be the second attempt. The second attempt is still in formation. It's not over yet. So we'll see if the bulls can make it back inside of this orange range. And why is that important? If bulls don't make it back inside this orange range, then this measure move right here, the big one, is still in play. So right now, we could probably still see that target being met if bulls are unable to come back inside this orange range. So I don't want to see them just to break out through it because it could just fail. What I want to see is prices shoot right through, pull back a couple of times and fail, basically just bounce at that support at the 22.30 level. Then it's probably going to continue much higher, probably to the top of this orange range at the 28.63 level, and then potentially break out to reach the 34.22 level. So that's how I'm looking at it right now. Basically we are at the lower side of the range. Range rules say we go from the lows to the highs and the highs to the lows. Since we're at the lows, we should go to the highs, but that's not going to happen all the time. And if you look at the clues, there's clues telling me that there's a chance of that not happening this time. So we'll have to wait and see. But as right now, earnings are approaching. It looks like May 3rd is estimated to be the release date after market close. So probably going to see maybe a little bit of sideways price action. Until then, this will be the day that'll probably tell me if we're going to probably continue higher or we're going to continue lower. So right now, prices are, trickling its way up. You can see how this move right here just looks like a correction for lower prices. So we'll have to wait and see. But as right now, it's not looking like a strong move higher. But again, things can change. Everything is just an attempt in the market, and we just have to go off of the failures that occur. But as right now, the bulls are trying to come back up into this orange range and potentially the top of this yellow one. So we'll see if that occurs. If not, the measure move to the downside, the big one, is still potentially in play. So that's everything I see on the daily. Here is the weekly chart. And you can see that prices are not just randomly stopping at this $20 level. It was a prior resistance. So prices had a double top right here. Back in 2019 and 2020, prices broke through it. Ever since then, it pulled back to that level because this was a unsustainable move. It usually will come back to the starting point of the move. So that's where we're kind of like finding support at right now. Well, the starting point of the move is right here at this $10, $11 level. So there's a good chance we might reach that in the future. I'll put a horizontal line there. So that looks like a level that was tested numerous times as support and resistance. So there's a good chance that prices will come back to it in the future. But right now it is finding strong support at this level right here, at this $20.26 level. So like I said before, on the daily chart, we are at the lows of the range. We could go to the highs, but if you look at the details, you can see there is this downward descent to the prices in this channel right here. Let's go and make it yellow. So we do have this downward descending channel to the price. There is this huge pop out of prices here, but you can ignore that. Basically, if you go on the monthly, it just looks like a wick, and those wicks will be contained in the channel. I'll show you guys that right now, just real quick. So you can see how it's still in the channel. We'll go back to the weekly. I'm going to talk more about that on my membership for the members. It's going to be on May 1st. I'm going to release a fractal mini course that will go over like how the market can be seen on the macro and micro scale depending on what chart you're on. So like I said before, I showed you guys a weekly. This is the weekly, and I said on the monthly, you can ignore this because on the monthly, prices are still inside of this channel. So I'm probably gonna go more over that on May 1st. So anyway, prices are inside of this downward channel. So it's bearish. Basically, that's telling me it's bearish because prices are still below the EMA. It's getting rejected by the EMA. We made a lower low than the previous low, so this is looking bearish. Even though prices look like they want to go up more, I would take any opportunity to short, in my opinion, because the breakout of this yellow channel will probably lead to a couple attempts by the bears to make a new low. So there's still a lot of bearish signs on this chart. Right now, you probably don't want to do anything, buy or sell, because there's reasons to do both. So that's when you want to stay out. Basically, that's telling me the price can go either way. We might not even see this breakout. We might just see a little pop up and then a crash down. So that can occur too. But once we see a breakout, there's a very high probability we'll probably see a couple attempts back down to this prior low, or even exceeding it to reach this $9-10 level. So as right now, prices are inside of this yellow channel. The EMA is acting as overhead resistance, and you can see that even though the prices came back to the lower side of the range, we're not really seeing that huge rejection that we've seen before. When prices came back to this level, you can see that we had huge moves up once, twice, 3 times. Now prices are back over here, but look at the move. It's very small, not a lot of buying occurring. So that's telling me that the aggressive buyers are probably stepping out, and the aggressive sellers will probably take over any second now. So we'll see if that occurs. As right now, it's still bearish. I would be taking any opportunity to look for lower price targets, even if we do see a pop up. So again, this chart is very bearish. Things can change, but as right now, still bearish. I think the target they really want to reach is this $10 level. So we'll see if that occurs in the future. But that's all I have for Sunrun stock. This is Vee Trades, and thank you for your time.